Good morning, everyone. This is Curtis Hawks with Insurance Agency Marketing Services, and I want to thank all of you for attending the webinar today. We're very excited to kick this off. This is going to be the first of a three-part series titled Leverage Life to Drive Sales, and so we'll talk a little bit more about what we mean by that and what we have on the docket here over the next couple of meetings. But before getting into all of that, I did want to take a couple of minutes here at the beginning to talk about some of the additional ways that IAMS is here to add value to your practice. First up is our new producer builders. As you can see there, we've got a variety of point totals, and all of that is designed for new producers. So as you get contracted with us in your first 6 months, as you're producing business, you can see that you can qualify for different tiers of resources, and that could be trips, it could be cash, it could be marketing campaigns. We've got a number of options that are up there. And if you've got questions on where you stand and how to participate in that, I would encourage you to reach out and talk to a sales director over here. That number is 800-255-5055. In addition to that, we've got our IAMS Business Builders. So if you know of an agent who maybe isn't quite happy with their current IMO, or you think they might be a really good fit for IAMS, send them our way. Not only will you get a bonus when they get contracted, but on an ongoing basis, you'll continue to receive revenue off of their production. You don't have to do anything. We'll take care of all of the service. And so it's a great opportunity to generate an additional revenue flow. In addition to that, we've got our marketing reimbursement program. As you can see there, you accrue $100 for every $100,000 of qualifying indexed annuity premium, and then $200 for every $100,000 of SPL or Life Target, and actually it's $10,000 on Life Target. And if you've got questions on that, like to know more, reach out, talk to a sales director over here. Again, that number is 800-255-5055. I have to highlight our back office support. That's been a cornerstone of IAMS for 38 years now, and whether that's on the front end, on the case design and illustrations, or new business processing and commissions, the team does an amazing job here. And so if you haven't tested our service out, I would strongly encourage you to do so. In addition to that, technology is another very big theme with us. So we've got our IAMS portal. On there, you can quote annuities, life insurance, get product rates, product information. We've also got a lot of our marketing information on there. In addition to that, we've also got our sales resource library, which is a host of information. It is point of sale compliant pieces that are consumer facing on a range of topics, whether it's annuities, life insurance, planning concepts, you name it. We also are getting ready to do some very significant additions to the IAMS portal here over the next week or so. So be on the lookout. If you haven't seen some emails in regard to new webinar, I believe we're going to do it tomorrow, but some really exciting things that we're going to be adding on top of what we already have available there. And just to take it a step further, from a technology standpoint, you can see there that we integrate with all of the top e-app platforms. If you've got questions on that, reach out, talk to a sales director. They can get you a breakdown like this of which platform integrates with what carriers. And again, we make it very, very easy for you to be able to log into the IAMS portal, and then no matter what carrier it is, are able to do business. As many of you know, marketing is key. It's one of the biggest challenges I think a lot of advisors face. And so to that end, we have put together an in-house creative team, and they work on a range of projects, whether it's websites, graphic design, social media, copywriting, you name it. The team does an amazing job, and I think one of the benefits of working with them is they just specifically focus on the financial services space. And so you don't have to explain what annuities are, life insurance. The teams are very well versed, and I think it creates a much better environment for working with them versus when you go to an outside ad agency. And so if you've got questions on the scope of those services, again, reach out. Talk to a sales director over here. That number is 800-255-5055. In addition to that, IAMS has built out an RIA, it's IAMS Wealth Management, We did that because we feel like that's just a growing market, and we've certainly seen that over the years since we built this out. And so if AUM is something that you've been thinking about and getting your 65 license, reach out, talk to the team, one of the sales directors over here. We can have somebody from IAMS Wealth reach out to you and talk about the scope of their services and how they can really make a difference in your practice as you're trying to add that in. In addition to that, we've got our life and annuity academies, and these really are an amazing opportunity to spend some time working on your business. When you're out in the field, you're working in your business. You're dealing with the carriers, the IMOs, prospecting, marketing, with clients, etc. This is really an opportunity over the course of a couple of days to spend time working on your business. In fact, I'll go ahead and I'll launch poll here real quick, and let me get that launched. But with these events, you get to hear about top annuity and life insurance product trends. You get to hear what the most current marketing trends are. You get to hear from top producers who are pulling back the curtain on their practice and going through what's created success for them, as well as what are the pitfalls that are out there. So the nice, in addition to all of that, one of the nice things about it is when you leave these types of events, you will have items that you can immediately implement into your practice that can make an impact. And so we've got our next event coming up. It's going to be here in Omaha at the home office. It's going to be, I believe, July 24th through the 26th. So if you've got interest in that, I would encourage you to check yes on the box. They do fill up relatively quickly, and so it's in fact, we've been marketing it a little bit here, so we've got quite a few registrants already. But I'll go ahead and get this closed down here real quick. Lastly, make sure to follow and like us on Facebook and LinkedIn. We post a lot of social content out there. In fact, it's one of the quickest ways to see information on what's going on in the marketplace. So we've got those links there. So let me go ahead and switch over here. So as I mentioned, this is the first of a three-part series titled Leverage Life to Drive Growth. And what we're focusing on this three-part series is different ways that life insurance can create leverage to either generate more income in retirement or to protect a client's retirement nest egg. And so today we've got Travis Fratini. He's the VP of Sales with NIW. And we're going to be doing an overview of the Kai-Zen plan. And this is a plan that's been around for a long time and incorporates the ability to generate maximum leverage for that consumer. And so we're really excited to have him on the call today to give us some education and go through those items. What we will be doing on this series is we'll basically, I think about every 3 weeks, over the next 6, we'll be doing a presentation, and we'll have different topics on each one. So really excited. A lot of work's gone into this. And with that, Travis, appreciate you taking some time to be with us today.
Of course. Thank you so much. It's great to be able to start your leveraging life insurance with a leverage strategy, right? So I really appreciate being on the call and joining your advisors and your team there. Again, my name is Travis Fratini, the VP of Sales for NIW. And like Curtis said, we've been around for a bit. NIW has been around since 1999. Kai-Zen now, I think, is almost on its 11th year. So this is not necessarily a new subject, but the first 3 to 4 years, it kind of was a little unknown. And right now, pretty much, a lot of advisors are saying, yeah, I've heard of Kai-Zen. I don't know all the details. Hopefully today gives you a deeper glance on what it is, and it might even find its way into one of your tools in your toolbox in regards to helping your clients achieve financial success. So again, NIW, been around since 1999. We are a premium finance vendor. We have now facilitated, as of this year, now $7 billion in loans for everything from traditional premium financing, estate tax type strategies, to what is now known, and what we like to coin the phrase hybrid financing. Kai-Zen is not traditional premium financing as you know it, and we're going to learn a little bit why it's not, and why this form of hybrid financing or a leverage strategy is now been opened up to a much larger market than the traditional premium financing market offers. So I hope that you can see that there's an opportunity here for a lot of your clients to participate. So we're going to talk a little bit about what the client issues are briefly. You know, a lot of our highly compensated customers and your clients, they're buying the investments, right? The long-term care, disability, life insurance. They've been propositioned by a lot of advisors and insurance agents on a lot of protection and care in regards to their retirement as well as insurance needs. But a lot of times these just individually help clients with specific parts of their plan, but it doesn't necessarily help the client address the financial fears head on that they're concerned with. When a survey was done, and this happens to be a survey done by Northwestern Mutual, and ultimately the goal was to see if they could sell some more life insurance, I believe, in this survey. But when surveyed, it was interesting that financial emergencies, not enough savings in retirement, medical expenses due to illness, and outliving retirement savings were the 4 top issues that clients are thinking about in regards to their financial future. If you notice, the loss of a primary breadwinner is way down there, I think in 9 or 10. Identity theft was actually more of a concern than loss of a primary breadwinner. So it tells you where the consumer's head is in regards to what they're actually worried about. Americans fear unplanned financial emergencies and the inability to afford retirement more than anything else financially. So why do you think that they feel this way? It's because they ultimately understand where they're at financially. As a matter of fact, the average US savings rate, that's the average income earner in the United States, is only saving about 3 to 5% of their annual income. The top 10% income earners in the United States are only saving about 10 to 12% of their annual income for retirement. But in reality, in all of the statistics done on what it actually costs to retire in a similar lifestyle at which you're enjoying today, you need to be saving close to 30 to 35% of your annual income. So you can see these numbers below these numbers. These are actually what Americans have ultimately have in their IRA or 401k accounts. But in reality, this is what they're going to need by the time they're 65 to enjoy that lifestyle that they enjoy today till they pass away. So the number's big, and our clients know that they're chronically under saving. So why don't people do anything about it? Well, in reality, and I know this sounds so simple, but there's just not enough money to go around, right? Our clients are in a place where inflation is hitting them in every direction. And we're in a lot of cases, our affluent markets are spending even more than they're saving. And then in reality, a lot of the commitments are very long-term for customers. They can't even imagine saving for 30 or 40 years to achieve those goals. So the long-term commitments are something that keeps them from achieving that goal. But in reality, we're struggling with, all of us as insurance agents and financial advisors are struggling with competing with everything from groceries to credit card debt to college loans to vacation. Everything that our clients are spending their money on, we're competing with that and helping them achieve their goals. So we think it's simple, just save more or invest more, right? But in reality, they just don't have enough capital to get there. The other issue is that from a max funded life insurance perspective, these things look amazing when you fund them 10, 20, 30 years. I remember getting into the business 15 years ago, and when IUL just started out, and if you were 30 years old and funded these for 20 years, the income or the tax-free distributions were incredible. But I never really thought to myself, are they really going to commit to paying these premiums for the next 20 to 25 years? And in reality, they don't, right? Statistically speaking, and we went to the carriers and asked them, kind of when the average premium stops and when you see some average lapses on permanent life insurance, not just term. And what we found that 7 to 10 years is when a client, sometimes even shorter, stops paying premiums and or lapses their contract. So that becomes very problematic when we're funding life insurance or overfunding life insurance. Well, what if we could offer a solution that targets both of those current issues? One, the capital issue, they just don't have enough money. And two, how can we do it in a time frame that they find achievable? Well, that's what Kai-Zen is. It's access to leverage. It's giving the client extra capital so that they can increase their overall benefits than if they were to self-fund their own 5-pay IUL on their own. The benefits in many cases historically will be about 60 to 100% more than if they self-funded a 5-pay IUL on their own. So that additional access to capital, that additional access to leverage increases not only the life insurance death benefit, the living benefits, but for a lot of clients, it's that retirement income gap that they are trying to fund that their 401k and their other savings plans just can't do alone. The other part, so we brought the capital into the game, and we'll get a little bit more into that later, but the premium payments are what causes a lot of people to not fulfill their IUL commitments. With Kai-Zen, they will be fully funded from their perspective in 5 years. These are this is a 5-year premium commitment from the customer. Now, it's a 10-year premium from a lending perspective, but the client's only responsible for those 5 premium payments. So Kai-Zen is a hybrid financing program designed to solve underfunded supplemental retirement plans for individuals that are earning about $200,000 or more a year. That's the qualification for Kai-Zen. So you're thinking, well, I work with clients that are making 200 plus a year. They're buying the IULs from me. I didn't even know about this opportunity. Well, now you can show them this extra leverage that will increase their overall benefits. Yes, those 5 premium payments that the client's committing to is the sole collateral for the loan to get access up to 3 times the money on their 5 premiums. 5 premiums is the sole collateral for the access to 3 times the leverage to increase those benefits. This is why so much Kai-Zen over the past 10 years has been sold, and is why we have some of the highest persistency rates in the industry, because 5 premium payments are absolutely achievable for most of our customers. And we're also providing them with death benefit, living benefits, all of the things that you're accustomed to in these max funded life insurance policies. But again, these are not big death benefit plans. These are very efficient, max funded option B plans where most of your cash is accumulating in a tax deferred index with one of the carriers, and we minimize the death benefit for cost. So these are very, very efficient max funded life insurance contracts. Now, what's this leverage look like? What's the plan look like from a 10-pay perspective? Well, this is an example of a 45-year-old male putting in $50,000 a year over the next 5 years. Now, the bank's gonna close to match that premium with about $46,667 with that client's first 5 contribution payments. After the client pays its 5th premium payment, the bank's gonna fully fund that plan year 6 through 10. So the client's putting in $250. We have lenders that will come in and provide $700,000 of leverage with that client's 5 premium payments. Now, how does it work? It's very simple. We just max fund this plan for the next 10 years. 5 premium payments coming from the client. That's covering those costs of insurance fees, expenses normally found in a max funded IUL, while that bank leverage is also added into the plan over those 10 years. We let the policy sit for an additional 5. So we are asking the client to commit to 15 years of wait and hold. These life insurance policies, whether they're IUL, UL, or whole life, we know they take 10 to 15 years to get those rates of return that we hope the client gets. So we let it grow for the 15 years. We take a loan against the contract and we pay the bank back. So after the 15th year, we exit that loan, we take a loan against the policy, we pay the bank back. And in this particular case, we let it grow to age 65. Now, you don't have to wait till 65. The client can start taking distributions as early as when the loan is paid back. But in this particular case, we're going to wait till 65. And we can see that we can take about $91,000 of tax-free loans from 65 to 90. Now, how does that compare, again, to something that's self-funded or that does not have any leverage associated with it? Well, if you were to take that same 50K, put it into an after-tax investment at the illustrated rate that the carrier is providing, in this particular case, 6.74, if you were to take those 5 premium payments, hold on to them, grow them, and take distributions at 65 to 90, you can see here 41,209. Not bad. If you were to self-fund an IUL, that's the stuff you're selling right now, max funded, 5-pay, efficiently constructed. If you waited till 65, you could take $58,000 of tax-free distributions out of that plan from 65 to 90, a total of 1.5, with about a $500,000 death benefit at age 90. But what about if we take that same $50,000 that the client can commit to, add the 3 times leverage? Well, in that particular scenario, we can take an estimated $91,000 out per year, a total of 2.3, and death benefit at age 90 of twice the amount of the self-funded plan. So again, that leverage is providing the death benefit protection that our clients desperately need, but it's giving them access to capital that'll help them get closer to their financial goals. That's what Kai-Zen brings to the table. Now, every one of these plans are stress tested. And what do I mean by that? Well, the 2 worst economic environments we could find that would impact or negatively impact an IUL as well as a leveraged IUL would be the high interest rate of the 1980s and the Great Depression, 1930 to 1945. And under those particular stressed conditions, and what you see on the right-hand side is the stressed conditions at which we placed on the IUL to mimic those time frames. We were still able to pay the loan back plus interest in year 5, and under a 1980s high interest rate environment, still pull out $68,000 a year. Now, it's not 91, but under a stressed condition, it's still better than the one that's not leveraged at all. Now, what about the Great Depression? That represents 9 zeros in a 15-year period of time. And under that stressed condition, we were still able to pay the loan back plus interest. And if we waited and held to 65, we were able to get around $59,000 out of the plan. Again, not 91, but the plan was robust enough to make it through what might arguably be the worst financial crisis in the United States. So these are very highly monitored, scrutinized, and stress tested. And I'll explain to you why a little later in the program, why the banks wanted to make sure that this plan was so robust during those periods of time. So we're going to go over really quick what the ledger looks like. One, because the numbers explain a lot. But I want you to realize that there's not much more to this than what you're currently doing. We're just adding leverage to enhance the benefit. In this particular example, we're going to use Allianz's Life Pro Plus. This is the only real modifications that we do to these plans. One, they're all option B. We max fund them. We blend a little bit of term insurance in there to keep the cost down, and we use what's called the ELO rider. That's a waiver of surrender charge rider. And the reason we use that is the sole collateral for this plan happens to be the life insurance cash values and death benefit. So that rider is a part of how we created this program. So we're going to go over the columns real quick so that you can understand them, and then we're going to get into the meat of why we call this hybrid versus traditional. Column A represents the forward curve. What we get that from Bloomberg. It's what the industry states that or believes the next 15 years of interest rates look like. The next column is the guideline annual premium. That's the max funded premium that we're utilizing to fund these programs. It's a guideline annual premium. The 5-pay, the $50,000 that the client's paying, that is all they're paying over the next 5 years. That's their contribution. But column C is the amount that the bank is lending to the program. So that 50,000 with the 46, and then once year 5 hits, they're putting in the full 95,317 for the next 5 years. Year 15, we take a policy loan against the plan and we pay the bank back. So that's what's going on in column D. And then column E is just the interest that's accruing year after year It's what you might call a balloon note that will ultimately be paid back on either surrender, death, and or year 15 when we loan exit. But kind of here's where the magic kind of lies in this program. Because of that ELO rider, you can see that there's a lot of liquidity in the contract. The client's putting in 50, the bank's putting in 46, the total premium's 95. Look at the cash surrender value. It's $95,000. It's like 90% liquid day one. Most of the plans that you're putting together, and it's no big deal, I never did it either, but when you're not using leverage and there's no need for it, we're not using the ELO rider often, the early liquidity option. But that particular rider provides so much liquidity in your IUL that the bank is willing to utilize the policy's cash value and death benefit as the sole collateral for the loan. I'm going to repeat that one more time. The life insurance policy is the only collateral for the access to capital, and it's because of the way that it's designed. So what we have here is, again, $85,000 in cash surrender value. So if the client passed away or surrendered at the end of year one, they couldn't pay their second year premium, there's enough capital to pay the bank back, and the client can walk away with about $34,000 of their $50,000 contribution, or they can just self-fund their plan and let it ride. There's a lot of security in this program. So if you have some ideas of maybe or negative connotations of financing, we've tried to remove a lot of those risks associated with borrowing with the way that the plan is designed. So there's a lot of options for our client if in fact they can't pay or they can't fulfill their 5 years. There's a lot of liquidity that'll leave this plan intact. Now what we hope for is that we get out to year 15, but in year 10 we lower the death benefit, we make material changes, we service this along the way, we loan exit, and now the client can start taking those tax-free distributions after the loan's paid back. So it's very straightforward, something you're probably getting very used to seeing. We just got a couple extra columns here that represent the access to that leverage. Now, let's talk about why it's different, right? You might say, well, wait a second, Travis, that looks just like you said bank loan. There's got to be some catch to this. Well, I want you to know why it's different, but specifically why it's different from traditional. With Kai-Zen, there is no loan underwriting. There is no financial credit checks. There's no loan documents to sign. There's no interest payments. There's no personal guarantees for the access of this capital. This is truly like a self-funded 5-pay from a client's perspective that they're letting a lender hold in a collateral position while the money is being borrowed. They have no direct relationship with a lender. That is the core difference with this plan, and it's all about the design. We make sure that, unlike traditional premium finance policies, we ensure, and I want you to just pay attention to the blue line, that there's always ample cash value in the plan day one moving forward to always be higher than the loan and interest itself. We never allow the loan to get to a place that's higher than the cash value by design. So that is why the banks have allowed for this type of lending to take place, because they understand that our designs secure the loan that they have against that policy. Now, the second part that makes this unique, because anyone can do that, right? That's just a design technique. The real crux of why a client doesn't have a relationship with the bank is because instead of the client going to a bank and getting that loan for the access to leverage, we set up 8 master trusts every year in the state of Nevada with Provident Trust. Those master trusts are the borrowing entities for the money. The client isn't going to the bank and getting that loan. What we do is we bundle hundreds of clients together every 8 times a year, and we're borrowing millions of dollars on the behalf of hundreds of clients. So let me give you an example. We may have, let's say, 100 clients putting in $50,000 a year. Well, we're going to go to the bank and match that $5 million of total premiums with a $5 million loan from a lender. That master trust is going out and borrowing that money on the behalf of those 100 clients. And we take that $10 million and we send it to Allianz. And instead of 100 micro loans, we have one big loan that gives us access to bundling, pricing. It reduces administrative costs. It allows us to get access to leverage for clients that normally wouldn't get access without the same risk associated with borrowing money. It is fundamentally different, but it gives the clients access to capital without a direct relationship with the lender. But what it also does is give the client a lot of control of their own plan. Why? Because all of these personal Kai-Zen trusts that the plan is in, the client is the insured and settler of their own living trust. It's attached to the master trust purely by a collateral assignment. So they own their own living trust. If they pass away, the death benefit first goes to pay the bank back, and then the client's trust will pay the beneficiaries the difference. If the client wants to walk away from the plan, cash values go back to the bank. The client then can self-fund or take the plan and do what they want with it. So there's a lot of, it's really good for both parties, the client and the lender. It protects the lender, but it also protects the client from a relationship with the bank that they may not want. They don't have to apply for the loan. There's no credit checks for this loan. As a matter of fact, no one even knows that there is any loan that the client is taking because there is no relationship with the bank. Fundamentally different than any other program out there. So what's the market opportunity for this plan? Well, there's 12 million households in the United States earning about $200,000 a year. So there's a big market for this. Now, 1% market share on the average size Kai-Zen case represents about $8.7 billion of premium per year. It's about $2 billion of target. Just a 1% market share of the individuals making $200,000 a year or more. Year to date, we just hit the $1.26 billion mark with loans facilitated for this program. We have a 96% persistency rate, which means that 96% of our business going back to 1999, including our traditional financing, is still on the books today. So our clients are happy with what they own, they keep it, and as a matter of fact, 20% come back and buy a second or even a third policy, partly because there's only 5 premium payments. So if they're young enough, they're in year 6 are going to buy another one. We find households buying one on a spouse, on adult children as a form of gifting. There's a massive opportunity. Well, why do we know the opportunity is so large? Because really we know that 90% of Americans are chronically undersaving. So that puts you in a really great position to help them solve a problem that we know they have and provide them with capital that they typically don't have access to. So who's the individual that qualifies for this? Well, it's 18 to 65. They got to be an adult, 18. We allow financing or hybrid financing up to age 65 with Allianz. The client should be earning a household income of about $200,000 a year or more. That's the typical client that buys this. Good health, standard or better. They need to be able to make 5 annual contributions. With Allianz specifically, and we're going to watch a video at the end of this presentation, they allow for a monthly pay option. So we're going to get into that a little bit more. And that's kind of who you're looking for. 30% of our customers are doctors. You can assume, you can kind of see why. These individuals are starting to save late in life. The market is really prime for that kind of customer, but don't narrow this down to a job or a job title. This is any household earning over $200,000. There's a good chance they need a program like Kai-Zen. So where are what are the 3 markets we're currently in? Well, the one is the professional market, the 35 to 65-year-old household income of $200,000 or more. They're just not saving enough. They need to increase their quality of life in retirement. They're looking for this as a supplementary income and benefit that they don't currently have. Businesses, this is a great way to create a program that will retain key talent, possibly recruit top talent. We see this used as a key man policy, a 162 bonus. We have a lot of companies offering this as a match program with their executives, or even fully funded by the company to provide benefits for key employees. So there's a huge market on the business side as well. But this is one that we're probably the most excited about, and it's gifting. We call it the Great Wealth Transfer. This program, again, remember, 18 to 65, 35 to 50 is probably our key demographic, and you got to earn $200,000 or more. What was happening over the years is a lot of agents were saying, hey, I've got clients that are 55, 60 that have adult kids that are 18 to 25. They don't qualify for Kai-Zen. Can mom and dad gift the money to them so they can buy Kai-Zen? And it was always done as an exception, but we have turned that into what is now a norm. We're allowing adult parents to gift premiums to their adult children that may or may not qualify for Kai-Zen based on mom and dad's financials. So now you can partake in an $84 trillion wealth transfer that's going to happen over the next 20 years by talking to mom and dads, grandma and grandpas, about the benefits of this plan for their adult children. And this has become an incredible sales concept for a lot of advisors to go back to their clients, to get themselves in front of the second generation, to provide those adult clients that might have bought that annuity or investment from you, that's looking for other ways to gift money to their kids outside of cash. And it has become an incredibly powerful strategy for advisors working in that 55 plus arena, that where they're talking to their clients about that gifting opportunity. So again, parents 55 and older, they need to be making about $200,000 a year or have a $3 million net worth. What the carriers are really looking for is the parent's ability to gift without it being a financial strain on themselves. So if you've got clients like this, work with the team over at IAMS. This is a huge market opportunity if you're already working in the senior markets. Now, kind of in conclusion, we're going to wrap up here pretty soon. Is you probably wonder, okay, now that's great. I love what I'm hearing, but I need some more training. What are the resources, the marketing material? Do you have a system that we can use to sell this? Well, the answer is yes. You got a system called ILIA, and ILIA is the program that allows you to invite your clients to educate themselves on Kai-Zen. You can market through this program, train and educate a customer, all the way down to enrollment and issuing the policy, all within this ILIA website. The entire program is digital. Not a single wet signature is required. From, again, pre-sale marketing, education to actual enrollment is all done within this software program. I'm going to show you a quick video of it, and then we will get ready to conclude. One second here.
The trend to research and purchase online has been accelerated by the COVID pandemic. Today, 90% of all information gathered by buyers on complex products purchased is done online. At the same time, millennials now represent 60% of all purchasers, with 50% of those surveyed not wanting to meet a salesperson ever. Information overload has resulted in more decisions being made more quickly with less information, with long-winded communications simply being ignored. We are now in an era where buyers trust information on the internet almost twice as much as those delivered personally. We either take advantage of the above, innovate, or run the risk of being marginalized. Introducing ILIA, the most advanced interactive learning and information assistant. ILIA is a client engagement, sales, enroll, and service assist tool that is product neutral, uses AI, and includes some of the latest neuromarketing and sales concepts to do all the above. This is what we're here to talk about. With ILIA, you can reach millions of prospective clients, allow meaningful relationships to be developed, while communicating in a simple and effective manner. ILIA provides our distribution partners new skills needed to succeed in this market. ILIA guides the client experience so they can research what's best for them, decide what and how much they wish to purchase, while tagging them to the agent whose marketing originated the lead. When a client enrolls, our objective is to compress the client portion of the process to less than 15 minutes, while not cutting corners in underwriting. At the same time, ILIA will maintain communication with the agent, the IMO, the life carrier, or trustee, and nudge, where appropriate, so the sales can be completed. After the client is purchased, the ILIA service module will care for the client over their lifetime, reselling and cross-selling as needed. ILIA's objective is simple: to use the latest technology and marketing concepts to allow agents to get more clients into the pipeline, close them more quickly, and increase the close probability. In a world where the pace of change is accelerating, allowing the clients to understand and purchase your products more easily online is crucial. Welcome to ILIA.
All right, so that's ILIA, and you get access to that through the relationship with IAMS. So we're very excited to offer that to you. This is not a program that's going to replace you. This is like anything else, technology driven. We hope that ultimately it empowers you, gets you closer to the sale, and assists you through that process. So we're pretty excited about that and to give you access to this. So in conclusion, you probably want to know, look, I hear you, but you know, I want to have confidence that this is going to work, right? And that's where the stress testing came into play. We actually had our carrier partners, their actuaries, kind of compare our stress testing against what they would deem the rates of return back in various time periods. What the findings were is our stress tests were actually more conservative than even the carriers' stress tests during those same environments, whether it's the 1980s high interest rate environment or the Great Depression. It was found that we were overestimating how bad things actually were. So again, we had National Life and Allianz do some historical looking back at what those portfolios would have done, how their products might have reacted during those periods of time. And they found that our stress tests were actually, again, more conservative than theirs. So again, third-party verification has been great. Annual statements, we service these plans until the premium or the loan gets paid back. And what I mean by that is we provide all of the statements, the servicing in regards to the bank loan, the financing, the refinancing if needed. And we provide these documents for you to show to your client every year on how its performance is against the loan. These are just examples of Grace Bernard, the owner of NIW, her policies. She owns two on her third, and how they're performing. So all of this servicing and annual statement information is provided for you now through these PDFs. In the very near future, that servicing platform that you saw on the ILIA platform will be turned on so that the client can log in and actually view their annual servicing in a digital platform. So that's coming very soon, and we're pretty excited about that. So one last thing we're going to show you, again, this is something that just came out in January. This is exclusive to Allianz. There isn't a single platform in the industry right now that all of them require annual premiums from a financing perspective. There's not a single hybrid or leveraged plan out there that allows a monthly premium. So this was launched. We're going to show the video and then we're going to conclude.
Here at NIW, we have some exciting news to share that will undoubtedly enhance your ability to promote Kai-Zen to your clients. We've listened to your feedback, and we're thrilled to announce a brand new ILIA option that will address most of the significant objections we've encountered today: affordability. Introducing the Kai-Zen monthly payment plan. Now, when you present Kai-Zen to your clients, you can offer them not just the traditional yearly commitment, but also the flexibility of a monthly payment plan. This is a game changer that will open up new doors and a world of possibilities. We understand that affordability has been the primary concern, preventing many potential customers from committing to Kai-Zen. With the monthly payment option, you can address these concerns head-on. Imagine the opportunities this unlocks. You can now tailor your pitch to cater to a wider audience, those who may have hesitated due to the upfront cost, which means reaching out to more prospects, closing more deals, and increasing your success rate. The new option provides your customers with the freedom to choose what suits them best, whether they prefer the cost-effective annual commitment or the flexibility of monthly payments. Kai-Zen has become even more accessible. Moreover, this opens up exciting new prospects for targeting companies in a whole new way, as businesses often plan their company benefits on a monthly scale rather than annually. You can align Kai-Zen perfectly with their needs. This new plan that is 100% exclusive to our Kai-Zen preferred agent, that is the only leveraged plan that is on a monthly payment schedule, unique to you and you alone. And there's more great news. We're launching online payments, which means no more hassle with wires and sending checks. Everything can now be done conveniently through our online user-friendly platform, myilia.com. Remember, the future is bright and the potential is limitless. With this new flexibility and this ease of online payments, there are no more barriers, only opportunities. Thank you for being the driving force behind our success. Let's take Kai-Zen to new heights together.
So in conclusion, we want to again thank you I want to thank the IAMS team there for letting me jump in and be a part of your series of webinars. I hope this spurred some interest. Maybe you've have those business owners, those clients that are in that income earning tax bracket that they want to create more of a tax favored alternative to their current retirement plan. Kai-Zen really is different. And what we can do with IAMS and the team over there is we can add more content, show you more about Iliad, maybe do another webinar regarding the tools that you have access to. But this was kind of our first stab at introducing this concept to the team there. And if you want more information, more content, access to Iliad, let the IAMS team know that you're interested, and we'll start working on that and getting you access to this information right away. So again, thank you, Curtis, and I will turn this over to you.
Well, I appreciate it, Travis, and I'm going to go ahead and I'll launch our final poll of the day, which is if you'd like more information on Kai-Zen and how to get access to it, you do have there's a licensing agreement for it as well. Just check yes, and we'll certainly have the live sales directors reach out to you to follow up with you. But you know, Travis, I think you made a lot of good points in the presentation, and I think right now, when you think about the current environment and the potential for tax changes and everything going on, it's just such a huge opportunity for accumulation life. And then when you can leverage that even further with a platform like Kai-Zen, it's just a ton of untapped opportunity. And Travis, I know you guys see that each and every day.
Yeah, and to add to that, the story's only stronger, right? Without even going down the political aspect of where we're all heading as a country, it is on everybody's mind in regards to where their taxes are going to be in 15 or 20 years. And this is the story couldn't be any stronger. But really, the other part to this, Curtis, is we've been telling that story for years, right? And we know that the debt's out of control. But now we're able to help a client that normally could not afford to get to their goals completely on their own. And that's why when we're talking to 40-year-olds and even in their early 50s, if they just started saving in their late 30s, early 40s, they lost decades of compound interest in a savings or a retirement plan. That's why doctors and professionals find Kai-Zen so appealing, right? It gives them time back that they lost. That leverage gets them closer to their benefit, closer to their goal. As an advisor, you're really bringing a solution to a pretty dire problem that these clients have. So it's a refreshing conversation.
Well, I think you're exactly right. So again, Travis, appreciate you taking some time with us. Again, this is the first of our 3-part series. So on the next portion of this, we're going to be discussing how to leverage and create pools of coverage to not have a client spend down their retirement nest egg for purposes of long-term care, nursing home, et cetera. And so there's some really innovative ways that you can do that. And again, talking about the current climate, there's a lot of legislation out there right now in regard to the creation of new taxes for consumers that aren't trying to protect their retirement nest eggs for purposes of long-term care. So a lot of opportunity on that, more to come on it here in the coming weeks. And for those of you that joined us today, appreciate you taking some time with us and hope you have a great rest of the day. Thanks.
Thank you.